So I thought of showing you how I like annotate charts and backtest basically old price action in a way where I just annotate my charts and journal them. Um, so yeah, basically just pick some random day. Let's say like there. Okay. I like to replay it from somewhere. Then we just kind of see what price action has done and you know. So for example here I would start from the higher time frame. So daily, weekly, daily, 4 hour. In this context, I like to look only one high time frame chart. So I kind of toggle through daily, 4 hour. Like you can see, daily, 4 hour. We are so far extended that we don't really need the daily chart right now. 4 hour is just enough. And how I would kind of continue with this is like, okay, well, we got a order block here for our order block. And we're basically expecting some type of reaction from this level because we are overall bullish. We are smashing through this high way too quickly for me to expect market to retrace anywhere here. So right now I'm just thinking of this week, this high there, and with that week, take gradient levels of that week. This is important to study as well. So see how price reacts in different levels. That lower quadrant level, price kind of trades there, rejects it initially, trades past it, clearly finds some type of problems at that level. Because look, the whole price swing here was super energetic. Immediately when we get up here into this week, we kind of start having some trouble to shoot higher. So clearly these levels have something to do with the fact that price is not willing to run anymore that quickly. You know what I'm saying? That's your for our order block. I like to annotate stuff like, look how algorithmically price closes at that level of order block. This kind of volume imbalance or price gapping lower doesn't really mean anything. The importance is where the body is close, not where they open. And even if this traded like far past down here, our order block levels are these ones. So, and even if you want to draw them from body, you could still allow price to wick around down here. Other thing, this one is propulsion block because it's an order block inside of an order block. It's not a very clean one. Maybe you don't have to use that one, kind of, but anyhow, it kind of works. Yeah, 15-minute propulsion block there. But yeah, really in the 5 time frame 4 hour, you just don't need to do much. You just see the specific levels. Maybe annotate that you're not expecting market to trade down here, and see that market is respecting this level. And with this journaling practice that I like to do, I don't really try to anticipate where market is trying to go. Rather, like, just do a little bit of a commentary of what market has already done. Then I kind of try to encourage myself with this different kind of comments, or with like saying like oh, I saw this happening and I knew that this was going to happen, and I try to encourage myself. um and that's something that ICT advocates for, so I'm trying to do that, because I know that he's a very very knowledgeable person, so yeah, just trying to follow his advice. But yeah, basically we traded far up, we are extended. I'm still not expecting bearish order flow or price delivery. Higher prices rather, when you consider all of this as well. So then I like to kind of toggle from the mid time frames, 15 to 5 minutes, and see what kind of is the cleanest one, what in which time frame I like to do my main annotations. And then I just go through the price action here. So for example, here we would do, okay, we got some time distortion here, price not really doing anything. We initially trade higher, tap that lower quadrant, trade lower, tap that again, trade lower, put on a bearish parallel gap there. What happens with that? We flip it, inverse it. Now this is not only inversion, it's balanced price range. This whole range is a balanced price range. And also that balanced price range lines up with our breaker. Now, is this whole range breaker? I mean, it doesn't look like it in 5 minutes, but 15 minutes, I would call this as the breaker there. So I would, yeah. So basically we got balanced price range and we got a breaker. And yeah, this is basically like an overnight price action that leads up to the London session trading that we are like inspecting right now. But yeah, you basically put on balanced price range plus 15-minute bullish breaker, and this is basically what happened in Asian session. So then looking at this as well, we like to see like is there some type of new day opening gapping. Well, it's basically this area here. So very minimal, doesn't really mean much for me, and I don't care about it. But you know, then I just continue inspecting price action, like where are the imbalances, what is price doing right now. We trade initially higher, trade higher again, we wick past this, and basically just sweep liquidity. After that we go on to purge all of this sell side. I'm trying to look if you see any type of fair value gap in this range. Now there's not a single fair value gap. There's a lot of wicking, which means that this price range is fairly balanced. And what happens when price range is balanced? You want to see price respecting the consequent encroachment, or with pounds price range, it's a main threshold of the area. So looking at this 15 minutes, that was a candle that I marked out. But if you look at this here, we have sell side action, we have buy side action. Sell side, buy side will leave the area. We'll leave the area here. We trade back into the area. We put on a fair value gap, which we reject. Leave again. Actually, all of this is happening in PM session Wednesday, 6th of November, which this even could be a long entry to go along then. But anyhow, about the balanced price range, you can see how this price action is balanced. Meaning what does balanced price range mean? It means that you have balanced delivery, both sell side and buy side. And when you have both sell and buy side delivery, then you want price to leave into some direction, leave the range. That kind of validates the balanced price range. It kind of creates the balanced price range. So this is choppy price action through which price doesn't necessarily have to trade through. We create balanced price range. We have this fair value gap, which we are kind of respecting, but really what we're respecting here is this reclaimed fair value gap, which is actually busy. And you can see how we trade in that, respect that. But yeah, and you can see how we kind of trade past. Sorry. No. We don't even tap that mean threshold, but we come like super close. You can see that's one tick difference there. So this is one of those things where price respects balanced price range. We got like some small fair value gap, but when you put on this much time distortion about balanced price ranges above it, and you're not expecting like a large sell-off day anyways, these kind of gaps should be expected to be breakaway gap, especially when you have like a high here through which the price kind of just shot through with very much swiftness. You know what I'm saying? But back to this bit of price action here. Balanced price range respected here. So as you can see, there is like two types of balanced price ranges. This is the first one where you kind of have just chop, leave the range, it's balanced. And here we have like one pass down, one pass up, and this is balanced price range as well. Different kind of one though. For you to be able to draw this correctly, most people know that the balanced price range is like two fair value gaps becoming like lining up in a way which we have one here and one here. Now, this is your range. These fair value gaps should create the range that you're trying to look at. So how would that work then? You want to take the highest price of the range and lowest price of the range. So in this case, what is the lowest price? Is it this one or this one? Well, clearly this one. So this is the low of the range now. Low of the balanced price range. What's the highest close of the balanced price range or highest price? Definitely not this one. This is much higher. So we would basically draw the balanced price range from this price, anchor it there to the high here. And this is your balanced price range. So this is now correctly drawn. Here price kind of consolidates a little bit more, builds some buy side, reacts out of that balanced price range. One thing I like to notice a lot is like market maker models, which in here work quite nicely. You got BPR here, price reacts out of it. This is your smart money reversal, and this starts the market maker buy model. So I usually like to annotate it in this way. So market maker buy model, and so you basically do that. Market gives you a possibility to enter. if this happened in correct and right time, I would be willing to enter from that, have my stop like around here. First target at that high, second target probably at that C level. So coming to the London Silver Bullet, everything that we have seen overnight here, it's kind of choppy, but we're trending higher. Market not really giving a reason to go short either. So before London Silver Bullet, market kind of dumps here. I like to inspect these smaller silver bullet time frames in 1 minute time frame. So market dumps here. It doesn't really sweep these lows, which is concerning in a way, but there is a chance that like ES could have swept them and given like SMT with the lows there. I don't know. But if that wasn't the case, then probably I would just miss this trade. If that was the case and that was in fact SMT, then the trade could be still taken. Now expecting this, obviously I'm long biased. We didn't take the CE. This is the target up here. So bearish range lower, we got fair value gap. Fair value gap inversed. CB inversed there. This one is inversed. Then initial breaker structure happens here. I wouldn't really like it. Like technically, silver bullet you could enter from like here. Like this big the entry, which would have been absolutely beautiful, but a little bit too vague for me. I would wait for a breaker structure and the inversion happening, because they are still respecting the fair value gap here. So inversion happens with that candle. Now obviously I don't enter that. Silver bullet means that you enter from the fair value gap, which I would have entered from here. Now overall target would have been here, which obviously had I held up there, or if you try to hold up there, you are losing the trade. But that's the reason why I have rules about partials and stuff. So I'm trying to take partials in important levels and good levels. So that would be partial number 1. This would be partial number 2. This would be the full TP, which never technically or never gets hit in this bit of price action, but these two ones do get hits, and it's good enough. Like 2R, 3R. This one would have been like 4R, something like that. Doesn't really matter if it doesn't get hit. This is very much profitable trade idea. Then I believe the real entry to longs would happen after this price leg up, but it doesn't really retrace convincingly towards the gap down here. But maybe if you want to do enter from that, you could have caught something like this. And usually if you have this like a 5 minute time frame, and you have this large order block, I like to scale to 1 minute and see if there's like any better area to place your stop on under. So for example, with this one, I wouldn't say that that's the case, because there's really just one pass higher. Like if there was like this 1 minute candle pulled a wick in here, I could technically have my stop below that one. But right now, seeing that that's not the case, I can't really do that. Maybe in like if I see like a wicking in other time frames. Like for example, 15 minute isn't looking that like the 15-minute candle didn't close that low. So if you wanted to, you could just pull your fib and place your stop around between this lower quadrant and the midpoint. So somewhere here could be your stop. So that's a way of kind of measuring and trying to like tighten your stop loss so that you can maybe enter with more contracts or stuff. So look, that was kind of mad. so I placed the stop below the consequent encroachment of the 15-minute wick, and price actually ends up respecting that area. That's kind of crazy. And ends up moving to my favor if this was a trade idea. But yeah, the thing is here, the wicks do the damage, and these are wicking through the mean threshold. So this is something you kind of have to just deal with by yourself. Do you close the trade at the mean threshold if it taps that? I wouldn't recommend that. Where do you put your stop in between this area? Because it could have wicked lower. The main thing is that it doesn't close below the area. So you just kind of have to deal with these kind of things by yourself. But yeah, the main thing is that I kind of go from higher time frame to low time frame, take screenshot, annotate on the charts, and try to like inspect these small price moves and see how price kind of reacts to them. Like you can try to annotate anything. Like every time you see like a BPR, you could annotate that and see how price reacts around that area or something like that. Mainly just try to look for different type of signatures that you kind of see easily on the chart, and try to build some type of conviction in your trading. That's kind of the point of this whole practice.